Hello, Maverick traders. It is August 15th, 2024. Let's jump into it. Today was another just straight up day, and we got more news that says the economy is doing just fine. We've got jobless claims continue to go down. So 2 weeks ago, we had a spike in these jobless claims. It was one thing the market was worried about. They've improved. Retail sales killed it. This report absolutely killed it. Up 1%. Expectations were for plus 0.4%. Really, really strong report. So it's basically saying the economy is not falling off a cliff like we thought it was 2 weeks ago. The Dow was up 1.5%, S&P 1.5%, Q's up 2.3%, Russell up 2.5%, oil, gold. Look, it was just an up day. And I want to show you, this is the daily chart, but I want to go to the intraday chart. This is a 5-minute chart, and this is the last 3 days. And I want to talk about these kind of days because I've been talking with other traders, and on Tuesday, it was very clear that there was a really, really bullish bias to this market. So let's take Tuesday's price action. When you see a day like this, where it just gaps up and has no pullback whatsoever throughout the day, what this means is that the bid is a mile thick. Now, when I say that, the bid is a mile thick, what that means, when institutions want to buy stock, they say, I want to buy 4 million shares of Walmart. I want to buy 2 million shares of Costco. I want to buy 1 million shares of Apple. When they say or decide those kind of things, you don't just buy them all in one day and at the market. That's not how you place orders as an institution. You've got to buy those when they're selling available. So you sit there on the bid. You sit there on the bid all day long, and if the bid moves up, you just move up your bid, because anytime anyone hits sell market, it goes to you if you're at the front of the line. As you can see here, there's just a bid that anytime someone sold, it just got sucked up by this bid that was, like I said, a mile thick. And then what happens is at the end of the days, all of these orders decide, oops, you know what? I'm not going to get filled on the bid. I need to go get filled at the close. And you usually get these little pops at the close. The next day, we sold off a tiny bit and then back to the same thing. Just buying. And then at the end of the day, like, oops, I need to get filled. I'm going to change it from the bid to the ask and get filled. These days are extremely strong days, and they're telling you that institutional buying is coming into this market. And it's not just for an hour or two. It's very, very heavy. So if we go back to our daily chart, I thought we were going to pause in this area. And look, we still may pause in this area. I said we're having a nice bounce. We're probably going to hit this overhead resistance. This candle is telling me I'm probably wrong. Now look, we could back down and spend the next couple of days here, but everything about this chart went from super negative to really positive very quickly here. I don't know if we break out and run tomorrow. I think we have a pause tomorrow, but I think there's no question that we're back into bullish territory. We're back into bullishness on all the technicals. If we take a look at the sectors, I want to take a look at the sectors instead of the heat map, because the heat map was just all green. It was just all green today. What did the best? Well, what did the best were the two sectors that did the worst on the way down: consumer cyclical and technology. So they're bouncing back the most. That's great, but I'm really interested in the things that did really well on the way down, and they're still now doing well on the way up. Basic materials was not one of those. We pointed out how basic materials has been underperforming, but now we get into the stuff like industrials, held up pretty well. Financials held up very well in the sell-off, and healthcare went up during the selling. It is a defensive sector, and now that the market is going up, it's still going up. So these are my three favorite sectors here. These are the ones that held up the best on the way down and are moving up on the way up. Utilities and real estate, which are defensive sectors, well, they are starting to weaken. Again, as you can see, they're basically flat, but they're underperforming because they are defensive sectors. I think industrials, financials, and healthcare by far look the best here. Yes, tech probably keeps bouncing the most. Consumer cyclical has a lot to make up. But I think if you're looking for something that if we do get a little bit of selling in this market, then it's a lot safer to own these sectors that actually did a little bit better on the way down. We are now at a +1. I will move to a +2 with another couple candles above that 50-day moving average. But look, we have gone very quickly from negative back to mildly positive. Now I can start adding on some more bullishness. So with that being said, we've got 3 trades here, 2 bulls and a bear. Let's jump into them. This is one that's been on my list. I really like the price action lately. This is Sunrun. It's a solar company. Here's what I love about it. When the rest of tech fell apart, which was right around July 4th, what did this do? It went up. When the whole market fell apart, what did this do? It went down for 2 days and then had a big bounce. We're up to highs here. We're already breaking through highs. So the question is, how do you want to play it? I like the $20 strike here for short term. I think $18, $20 diagonal spread makes a whole lot of sense. If you want to go vertical, maybe a 19.21 out a couple weeks on Sunrun. RUN is the symbol. I wanted to get some more exposure to financials, so I looked through financials, and this was my favorite financials. I wasn't able to grab all the chart because it would make it all very small, but if you take a look back before this top here, where we got up to 490, we ran from 330 up to 490. So this was just a huge run, an absolutely huge run here. And what we've seen here is basically a bull flag. As you can see, we've now broken out above these. We came down and we retested that level. And you can see we're breaking up here. So this should be a new uptrend. Looks really good here on MasterCard. How to play it? Look, you can play this a bunch of ways. There's a bunch of strikes, a bunch of expiries. You could be directional. I think the next stop is probably up here at this 475 where we popped here off of earnings. That's probably the next little bit of a resistance. So 475 is a decent target. So that means 465, 475 bull call spread. You're probably going to pay about $4.50. That means your max gain is $5.50. But look, you could go more than that if you want to give yourself some more time. I don't see anything wrong with doing like a 465, 480, giving you a little bit more risk reward on this as this thing breaks higher. So I do like the financial sector. It's one of my favorite sectors at the moment. And then let's talk about shorts. I avoided bear rallies at this point. So we have a ton of stocks that underperformed and have bounced off the bottom. I'm completely avoiding bear rallies because those stocks are probably going to be bouncing back if this market continues to go higher. So I didn't find a ton of bearish trades, but I found this one because this is not a bear rally. This is bad earnings. And you can see over the last 3 days, the market has been super strong. All red candles, all selling. I like this one down to 10. I'm looking at a 10-11 bear put spread. This one's fairly directional. You're probably going to pay about 35 cents, maybe 30 cents. So that's going to give you about a 2-to-1 risk reward ratio on this down to 10. This is a little bit aggressive at that 10, but this is really the only way to play this with an option spread. Let's talk about tomorrow. I said this earlier, I think it's a rest day. We had a big rally off the bottom. Everything's looking really strong. We got institutional orders in there on the bid. Big question is, are they really going to be chasing hard on a Friday? My guess is, you know what, they'll be there buying, but I don't think they're going to be chasing things at this point. So I think that's where we are. But next week, this just leads us to a very bullish place in the market. There is really no earnings tomorrow. We did get some earnings after the bell from Applied Material. Last time I checked, it was down about $5. So look, we might start the day off a little soft, especially in technology, off of Applied Materials, missing earnings a little bit. But look, the market, the buyers are there. The buyers are there on the bid. I showed you that intraday chart for a reason. Anyone who's still bearish, that bid is a mile thick. That's institutional orders coming into this market. Those institutional orders, they're thick. They are, again, very deep, and they usually last for a couple weeks. I think you want to get back on the bullish side. We finally have the technicals to show us that's the right place to be. We can lean into it. We don't have to jump and just get crazy bullish all of a sudden. Just start leaning back into being slightly bullish here as this market goes up. Understand we are approaching September 1st. The 6 weeks starting September 1st are the weakest 6 weeks historically. Typically, that's where we see the biggest sell-offs. Who knows if it'll happen this week, but we have to be at least realistic for what we're going into. I don't think you can get super bullish here. I just think you need to be mildly to moderately bullish. That is the market roundup. Thanks, everybody.